Hello everyone, today we are going to talk about Forex trading again. In the previous lecture we talked about how we should get an app and how we can set up a demo account. In this one we'll be talking on how we can buy or sell price currency versus base currency, trading volumes and so on. Okay, let's get started. We can see our currency pairs here, their respective prices for offer and bid. And let's pick the first one, which is Euro USD. Euro in our case is base currency, USD is our price currency. Remember that a currency which is located in numerator is called base currency. And the currency that is located in denominator is called price currency. Okay, once again, numerator is base, denominator is price. And another thing is that buying base currency is the same as selling price currency. And selling a base currency automatically implies buying price currency. And it applies for all conventions in all Forex markets, and all brokers are using the very same concept. Like in all quotes, the very same concept is used. Okay, let's say we think that euro will appreciate, and if we are trading with Euro USD, euro appreciating automatically implies USD will depreciate. At least that's our forecast. So what we need to do, we have to buy euros. So okay, so to do that, we click on Euro USD. When we click on that, we see When we click on that, we see the following window. So we click on new order, and here we can press either sell or buy. In our case, we believe that euro will appreciate, so we have to buy euro. So this is an instant execution, and here you can select 0.1, 0.01 negative, and so on. So we can adjust our trading volume. You have to remember that the standard trading size, which is equal to, okay, let's type it here, 1.00. 1.00 is our standard trading size. The standard lot is equal to 100,000. So what that means is that when we click on buy, and if the trading volume, if the trading size is 1.00, it means that we are buying 100,000 euros. If we think that 100,000 euros is too much and we'd rather go with 5,000, then we have to put here 0.05. So 0.05, how we can know how much we'll buy if we use 0.05? Yes, you are right, 0.05 multiplied by 100,000. Remember, 100,000, 150 is our standard trading volume, which is equal to 1.00. So 0.05 multiplied by 100,000 is equal to 5,000 euros in our case, because what's the base in our case? Euro. So we click on buy, and here we go. The transaction is here. We can see that when we just bought euros, we're automatically in the negative zone, so we are in a loss. Why is that? This is because the dealers, they are charging us spread, or you can think as a spread is actually the difference between bid and ask price. You can think of this thing as some sort of commission that's being charged by brokers. How we can see the spread? So it's actually pretty easy. So you can see at the bottom we have like a few tabs. We click on the one which has a label of with arrows. We click on that, so we see the quotes here, and the Euro USD, we can see here spread. Spread is 17-18 fluctuates actually. So the spread is actually calculated as the difference between offer and bid price. So actually, if we take the price which is in our right, 1.08342, and we will subtract 1.0832, we actually will get the spread. So how the spread, another thing I want you guys to know, so the basis point, or as they say pip, 1 pip is equal to 0.0001. 0.0001. And when we say like 18, we multiplied 16 or 18 spread by 0.0001, and that's how much we are charged. So let's say our spread is 20. Then we multiply 20 by 0.0001, we get 0.002, and we multiply that by our trading size or our trading volume, and that's how much we are charged. If you are still confused about the spread, okay, don't get too hung up with that. We'll be touching on these things on more details in our future videos. But what you need to understand for sure is the trading volume. The standard side is 100,000, which is equal to 1.00, and we can always adjust it. Let's say we also want to trade with USD and Canadian one, and we click on that new order. In this case, let's say we think that USD, American dollar, will depreciate. Depreciation of USD implies appreciation of Canadian dollars. So what we need to do? So what's our base? The base is USD, and we want to sell USD. We have to click on sell button. Okay, let me just go other way, explaining the very same thing. Let's say we believe that Canadian dollar will appreciate. But in this quote, the Canadian dollar is not our base, but its price. So going back what I've said earlier, price currency appreciating implies base currency depreciating. So we have to sell. We adjust here the trading volume. Let's say now I want to trade with $10,000. And now what I need to do, put 0.10. So 0.1 we multiply by standard trading volume, which is 100,000, and it's equal to $10,000. And we click on sell. And here we go. So we have two transactions. So we can close these transactions at any time. To close it, we simply click on the transaction. Click on close the order, close with loss. So now it's in loss. Let's say if we were lucky and we had profit, then the amount will be reflected as blue. It will be reflected in blue color. So okay, let's say I'm closing these orders. Let's say to close it, click on close order, close with loss, done. So I'm losing, but I'm closing.